goods or services is liable to pay GST as per the GST Act. We have to check the definition of supply as per the GST law. It covers almost everything. And we have to check the goods or services definition. Some goods or services are exempted as per GST law, and for any other goods or services we have a liability to pay GST. Then what is reverse charge mechanism? Reverse charge mechanism means the liability to pay on the recipient. In this case, the supplier is liable to pay. But here, the buyer, the recipient is liable to pay. In which situations it is coming? In the case of notified supplies as per the GST Act, or in the case of imports. Say one person in India, say Mr. Vijay, has imported some goods from Singapore. That is the imports. The Singapore businessman doesn't have any business in India, and he will not pay any GST to Indian government, the Singapore supplier. But who has to pay? Mr. Vijay, who is importing such goods to India. He is liable to pay GST. So in that case, we will call it as reverse charge mechanism. And the liability to pay GST is on the third person. You can see here the supplier is liable to pay GST. Here the recipient, the buyer, is liable to pay GST. But here it is on the third person. Who is the third person? In this case, e-commerce operator. Let us take an e-commerce operator. Can you name any e-commerce operator? One example is Amazon, Flipkart, or Snapdeal, whatever it may be. We will take the example of Amazon. So suppose a company, say Micromax mobile company, is selling their mobile through Amazon platform. Amazon is an e-commerce operator and Micromax is a mobile selling company. And one customer buys this mobile, Micromax mobile, from Amazon. In that case, the customer has to pay amount to Amazon. Amazon has to pay that price amount to the Micromax mobile company. You got the point? In that case, Amazon is the e-commerce operator, Micromax mobile company is the seller, and there is a customer. Who has to pay GST? As per the GST law, the e-commerce operator has to pay GST. That is, Amazon company has to pay GST. How they can pay GST to the government? When they are getting price from the customer, and when they are paying that collected price to the Micromax company, they have to deduct tax collected at source amount. That is, if the price for the mobile was for 5,000, the customer paid 5,000 to Amazon. Amazon has to pay 5,000 to Micromax mobile company, but Amazon has to deduct rupees 500. Say rupees 500 as TCS amount. That should be deducted from 5,000, and balance 4,500 only should be given to Micromax mobile company. So this 500 deducted by Amazon from the price payable to the Micromax mobile company should be paid by the Amazon company to the government. That is called TCS. So this TCS is applied to e-commerce operator. That is GST payable by the third person. Then government department, etc. What is government department or company? That is run by the government, state government or central government. Okay, they have to deduct TDS from their suppliers. Okay, so that is also applicable. So liability to pay GST is on three persons. Here it is on supplier in the normal scenario. Here it is on recipient in reverse charge mechanism, and here it is on third person in the case of e-commerce operates or government departments or companies. Then let us look upon the components of GST. What are the components of GST? There are three components: CGST, that is Central Goods and Services Tax; SGST, that is State Goods and Services Tax; and IGST, that is Integrated Goods and Services Tax. Let us look upon intrastate supply. What is an intrastate supply? Here the seller is in Mumbai and the buyer is in Nagpur. Both places are in the same state, that is Maharashtra. So intrastate means within the state. Both seller and buyer are in the same state. And in that case, GST has two components, central GST and state GST. Suppose say the rate of GST was 28%. Okay, in that case 14% will be CGST and 14% will be SGST. This 14% will go to the state central government and this 14% will go to the state government. Okay, so in case of intrastate supply, that is sale within the state, there are two components for the tax GST, that is central GST and state GST. Central GST is payable to the central government and SGST is payable to the state government. And interstate supply, let us look upon interstate. What is interstate supply? Suppose the seller is in Mumbai and the buyer is in New Delhi. Okay, in that case it is selling from one state to another state. Okay, in that case it is called as interstate subsidy, that is GST is payable and that should be paid to the central government. Okay, and actually there is a share from IGST that is payable to the state government, and out of this collected IGST, central government has to pay amount to state government also. But I put a question for you, which state government will receive the share from the central government? Either it is Delhi government or the Maharashtra government. I repeat the question. There was a sale from Maharashtra to Delhi. IGST was payable to the central government. It is paid by the buyer, and one part of IGST will be given by the central government to the state government. But which state government? Is it Maharashtra or Delhi? The answer is Delhi, because we are applying destination based tax on GST scenario. Destination based tax means where is the consumer, where is the customer, that government will get the income, will get the share of tax. Okay, that is called destination based tax. So at the present scenario, at the present indirect tax system, the seller's government will get the tax, but in the GST scenario it is destination based tax, so the buyer's government will get the income. That is a very important point, very important change in the GST scenario. Okay, so you have to be careful on that. We will also look upon TDS and TCS. I already covered the e-commerce portal and all with the example of Amazon. Then certain categories of registered persons, this e-commerce portal like Amazon, Flipkart, or government departments, government companies, etc., they have to collect TDS or TCS and they have to pay to the government account. Other than that, as per the GST law, there are various interest, penalty, fees and other payments which are required to be paid by the taxable person. After registering in the common portal, the taxable person will get three ledgers, that is tax liability ledger, cash ledger and input tax credit ledger. Okay, so three ledgers will be available to the taxable person. Tax liability ledger means it will show the total liability of tax that is to be paid by the taxable person. Cash ledger means it will include all cash received as well as TDS and TCS and all. Then input tax credit ledger, that is the credit of input tax paid on purchase of goods or services. So there will be three ledgers. Then e-ledgers. This e-ledgers means that is, I told three ledgers will be there. Tax liability register will show the net tax liability. Cash ledger will show deposits made in cash as well as TDS or TCS. ITC ledger will show input tax credit as self-assessed in the monthly returns. Okay. Then this input tax credit can be used only for tax payment and not for payment of interest, penalties, fees, etc. Tax liability of person, and if there is any amount pending as on previous balance or something like that, it may also show that at the end of the month he can set off the tax liability with balance he can pay cash. Okay, so in this chapter we have seen for whom there is a liability to pay GST. Normally it is on the supplier, and in some cases like reverse charge mechanism for imports, recipient, the buyer has to pay GST. And in some cases like e-commerce portals or government departments or companies, that is called TCS or TDS, the third person has the liability. GST has three components: CGST, SGST and IGST. Intrastate supply means sale within the state, that has two components: central GST and state GST. Interstate supply means from one state to another state, IGST is supplied there. Other payments include tax deducted source and as well as tax collect source, that is to be done by e-commerce portals or government departments or companies. Then interest, penalties, fees or any other payments also should be made by the taxable person. There are three ledgers: tax liability register, cash ledger and input tax ledger. So all this is about the first PPT. Let us take the next chapter, that is TDS and TCS. To whom TDS and TCS provisions are applicable. Tax deducted at source, that is TDS. Government and government undertakings are notified in the case of TDS, and in the case of payments exceeding rupees 10 lakhs to suppliers, they have to deduct TDS at 1% and remit that TDS to GST account. Okay, to which GST account they have to put? To the supplier's TDS account. Okay, in the name of the supplier. So in the case of government and government undertakings, they need to deduct TDS at 1% for any supply which is above 10 lakhs. Then utilization of TDS. Any amount shown as TDS will be reflected in the electronic cash ledger of the concerned supplier. That is important. It will be shown in the cash ledger of the concerned supplier from whom that TDS amount was deducted. Then he can utilize this amount towards discharging his liability towards tax, interest, fees or any such other amount. So the government undertaking will deduct TDS from the supplier's amount, and government undertaking will pay it with the supplier's GST account, and the supplier can see the TDS in his cash ledger, and with that amount he can discharge his liability, GST liability. Then important points: compulsory registration should be done by the government undertakings. Then remit such TDS collected by 10th of the next month. Suppose in July 2017 TDS was deducted, so in that case TDS should be remitted with the government account with before 10th of the August, the next month. Then it should be reported in the GSTR return. Then issue TDS certificate to the deductee within 5 days. Okay, so that should be done. Then failure will be attracting a penalty. Then what is tax collected at source? We have already studied, that is TDS should be deducted from the supplier's amount if it exceeds 10 lakhs by the government undertakings. Let us look on tax collected at source. TCS is applicable for e-commerce operator, that is when the e-commerce operator pay the amount to the supplier, the e-commerce operator need to deduct a percentage of amount, that is called as TCS. Suppose Amazon is the e-commerce operator. When Amazon is paying amount to Micromax, like what I told in the last example, there should be a deduction. Okay, maybe total amount is 5,000, but TCS amount should be deducted. Balance only should be paid to the Micromax. So here the amount deducted is 500, that is called tax collected at source or TCS, that should be paid to the government. Then tax collected at source should be deposited to the appropriate GST account. issue a certificate to the supplier by the e-commerce operator, then it should be deposited within 10th of the next month, and any such amount deposited will be shown in the electronic cash ledger of the supplier account of the Micromax company. Okay, in this case, if any amount is deducted by Amazon, Amazon should pay that amount to the GST account of the Micromax. Then Amazon should issue a certificate to the Micromax company. It should be issued, I think, within 5 days, and the amount should be deposited before 10th of the next month, and the amount deposited as TCS will be reflected in the electronic cash ledger of the Micromax company. Okay, so in this chapter we have seen TDS and TCS provisions. TDS is applicable to government undertakings and TCS is applicable to e-commerce operators. Then now let us look upon how to pay GST. How we can pay GST. Okay, the first payment methodology, payment mode is input tax credit. What is input tax credit? That is taxes paid on inputs. What is inputs? The goods or services which we have consumed or purchased for doing business, that is called inputs. Then while buying any such inputs, if we have paid any GST, that is called input tax credit, and that can be availed. Okay, that can be deducted from the our liability, GST liability. Then that is called tax paid when purchasing goods or services, and it can be set up with the tax liability. Input tax credit can be adjusted towards tax only. Input tax credit cannot be used for payment of interest, fees, penalties, etc. If there is any input tax credit, that should be adjusted towards tax only. Okay, then some points that should be remembered is no input tax credit on account of CGST shall be utilized towards payment of SGST. That is, central GST credit can be used for payment of CGST liability. State GST credit can be used for state GST liability. The important point is central GST input tax credit should not be used for discharging state GST liability, because central GST is for central government and state GST for state government. Okay, and another important point is the credit of IGST would be permitted to be utilized for payment of IGST, CGST and SGST in that order. So CGST credit can be used for CGST payment, SGST credit can be used for SGST payment. Both CGST and SGST can be adjusted with the IGST, as well as IGST credit can be adjusted with the CGST or SGST. Suppose say our total tax liability was 1 lakh. We had a input tax credit of 60,000. So we deducted that 60,000 from 1 lakh. Balance is 40,000. So that we need to pay separately. So payment of cash. Cash payments will be recorded in the cash ledger of the taxpayer maintained in the common portal. Okay. Then what are the different modes? The different modes are e-payment, RTGS, NEFT, or it can be paid on counter payment or in branches of banks. Those banks should be approved by GST Council to receive. That is, we can pay the tax by e-payment, RTGS or NEFT, and we can pay it in the counters of selected banks. I think all banks should be up by the GST Council. Then we can pay through credit card also. That is, we need to pre-register credit card with the common portal. We need to register it before making the payment. Then GSTN will validate the credit card with the service provider. Payments are allowed without any monetary limit. We can pay for any amount. So that is credit card. In this PPT we have seen how to pay GST. We can adjust in tax credit. There are some rules regarding CGST credit and SGST credit. Then we can pay balance tax liability by cash, e-payment, RTGS, NEFT, or directly in the bank. Then credit card payment also can be done without any monetary limit after registering the credit card with the common portal. Hope the points are clear to you. Then we will cover on the last PPT for the day, that is challan generation. Challan is used for payment of taxes or any other amount. That is not the printed challan, it is online. We are making payments online. So after logging to the GST common portal, we have to enter payment details required. Then challan will be generated and we can save the challan midway for future updation. We have to enter all details which is required for payment of tax after logging into the common portal. Then finalization of the challan. We can edit a challan before finalization, but after finalization no further changes can be done. Then he can generate the challan for use of payment of taxes. After finalization of challan, we can generate the challan, and with that challan we can pay taxes. Actually, in our intermediate courses, we are covering the practicals of this payment of GST. So in this beginner course, we will understand what is a challan, how we can pay and all. But in the intermediate course, we will practically see how we have to make the payment. Then the remitter will have the option of printing the challan for his record. Then validity period of the challan. A challan will be valid for 15 days after its generation. And if 15 days is expired, it will be purged from the system. It will not be available. Okay. Then however the taxpayer can generate another challan at his convenience. Okay, for any payment if it is not used within 15 days. Then another thing is common portal identification number given at the time of generation of challan. It is a 14-digit unique number to identify a challan, and CPIN common identification number is generated once the challan is finalized, and it will be valid for a period of 15 days only. Challan identification number, that is CIN. It is 17-digit unique number, that is 14-digit common portal identification number plus 3-digit bank code. It is generated by whom? It is generated by authorized banks or RBI when payment is actually received. Okay. When payment is received, challan identification number will be generated. It is an indication that payment has been realized and credited to the appropriate government account. So we will get a confirmation through challan identification number, and it will be communicated by the portal to taxpayer and GSTIN. Okay, it will be informed by the bank through the GST common portal to both taxpayer and GST network. Then no manual intervention is involved in the process by anyone including bank or the taxpayer. Okay, that is so after making payment of the tax, we will get a challan identification number. Okay, so we'll have a quick review. There will be a challan for making tax. After logging into the GST network common portal, we need to enter payment details required in the challan. Then challan will be generated. We can save or finalize. Then after finalization, we can generate the challan for use of payment of taxes. We can print the challan if required. Validity period of challan is 15 days, and after 15 days one can generate another challan. Then CPIN common portal identification number will be generated at the time of generation of challan. There is a 14-digit unique number, and there is a CIN challan identification number. There is a 17-digit unique number that include 14-digit CPIN plus 3-digit bank code. It is generated by the authorized banks or RBI. It is an indication that the payment has been realized and credited to the appropriate government account. It is communicated by bank. So on payment of tax, there will be a CIN. There is no manual intervention. So that is the webinar for the day. Hope the points are clear to you. We have covered valuation rules as well as payment of GST chapters. Textbook, there is an icon, this icon. Okay, this icon. That means there is a video available in the LMS. Okay, one boy reading the laptop, looking at that laptop, that symbol is there. For any such symbol, there is a video available in learning management system. Okay, so you need to see the video and afterwards you need to read the study material. Okay, then you will clearly understand what is the thing. That is important. Okay, and I will also show the questions after each chapter. There is an emblem like this. Okay, there's an emblem like this that is shows some questions are available in our LMS that should be appeared by you. Okay, then only you need to be, you will be confident that is you have learned that chapter. So these symbols are important. Okay, and in the beginning of the textbook, and in the beginning of the textbook there are some symbols explaining why it is given, that should be read. Okay, so this is the webinar for the day. Hope the points are clear to you. Thank you.